7 November, Monday, MAO with Cal, Market Analysis and Outlook. Now, US employment will start pretty soon. Undeniable. Why? Because this is something that the impact of interest rate will cause. And of course, when interest rate is high, earnings will go down, cost increases, unemployment will seep in. Alright, so time to brace yourself. Okay, but before that, once again, guys, disclaimer as usual, and thank you, Ames, for the kind sponsorship. Now, Twitter sack people is very normal because Elon Musk just bought the company and privatized it. So it's very natural for him to remove away people who were previously with the previous management, right? So for now, this is nothing special, nothing new, all right? In fact, Twitter this morning just came in and said that they're going to ask them, those are being laid off, right, to come back in again. So this is really, when you are working with Elon Musk, you expect this to happen. Now, this is not what I'm trying to explain to you now. This one. Apparently, Facebook Meta is notifying employees at large-scale layoff this week. This is the one. Now, why is that so? Because Meta shares that came down more than 60%. Oh my god. And you're losing millions to billions of dollars in all their so-called little business venture, like Metaverse. So definitely they have to cut. This is undeniable. And apparently it's not only them. There are more companies, okay? More company is going to lay off people. And this is showing signs of recession, and it's something I've been saying for the longest of time, but people say that it's not happening. No, it will happen, my friends. It will definitely happen. But are we near a crisis? I'm so sorry, we are not even near there. Why? Because whenever there's a crisis, right, this is the marker, the sign that the market must has. So you can see that from 1974, 82, 87, 90, 02, 09, and 2020, these are all the major crises. Most of them have the checklist, okay? Right, the signpost of it. But at the moment now, as of November, we are not even near there at all. With the most we have is more bears than bulls. We have the 5% market rallies. So now we are inching towards the unemployment data, and that is what happened last Friday, where it was 3.7%. So it was slightly better than expected, and the market just buy into it. So the question is it a good economy or bad economy? Now, Joe Biden says that the economy is good. Apparently, that means that the stock market go higher. But we all know that when unemployment data start to go higher, is how the stock market actually comes down. So the US bond market now is going to be very scary because now we are really at the worst performance since all the way since 1920s. All right, this is really incredible. This is 100 years of the performance, and we are at the worst level right now. So why is the bond doing so badly? Well, you must understand that in 1966 to year 1984, okay, that was where the debt itself, right, we were in surplus. But from 1986 onwards itself, right, the total debt in America, the GDP debt itself, is went all the way to the highest point. Okay, why is that so? Because the interest rate at the time was on the way going down. So the problem is this: when the interest rate was going downwards, all right, it is okay to basically has a debt inside that because the cost involved is pretty low. But now we have a problem with the interest rate going up and the debt at so high level, then that means that someone could go bankrupt soon. So which one will be going bankrupt? I think that is pretty clear. You should know that. That is the reason why Janet Yellen is so worried. Right, on 12 October, she already said that she's worried of the loss of adequate liquidity in the treasuries, okay? But very incredibly, that's about a week later, she rejected the concern of inflation. All right, but we all know that until to date, right now in November period, Federal Reserve Jerome Powell is talking about inflation. So somehow someone is not getting the memo. So what is happening right now, guys? Now we all know that the stock market has been going up because of the balance sheet of the Federal Reserve. So now think about this. It was just this tapering has just started. Okay, just started this quantitative easing. Tightening, sorry, my bad. But then the stock market has pulled back such a fair bit. So what happened if this is to go down all the way here? Is what will happen to the S&P 500? So I did a very simple calculation for you guys. Now, if let's say, okay, if the Federal Reserve really can do their QT all the way down, all right, so think about this, right? The S&P 500 would have to go down all the way to 3,000, okay? That is the likelihood that may happen, okay? So would you think that the S&P 500 will go down 3,000? Leave a comment if you can do that. So this is something that we have to, ask ourselves the question here, because we must understand that now the biggest holder of the US government is still the Federal Reserve. Then, of course, held by some of the US investors. the banks. Now, of course, the foreign holders are not really the biggest, but they are one of them. Now, think about this, okay? Think about this. What if they start to release, okay? So we all know that the largest foreign holders of the US Treasury now is still Japan, then followed by China, and followed by UK. But the question is this: we all know that this the problem now having in Japan is that they really need funds, and one of the easiest way to get out of their problem now is to basically liquefy some of the US Treasuries. And of course, with the current relationship now with China, it's kind of expected that China may also proceed to do this. And UK, who just went through really big this government reshuffling itself, most probably they will also be dumping. And think about this: imagine if the Japan, China, UK, the three top holders start to dump, what will happen to the rest? Now, we all know that they are holding this right now because they want to be very close to America. But what if, as you can see, what if the Federal Reserve themselves is dumping? What type of message is sending across to everybody right now? So this is where it gets very concerned, because if the Treasury, if the Federal Reserve start to dump the bonds, then of course that means that people are getting very worried of the US economy. And of course, if that happens, then this can go into a very big, incredible problem. So that you basically now left who's going to hold the final baton or the baby, so that, you know, and once that person or the entity will be doing that, something bad is going to really happen. Okay, now who will win on the 8th of November? So we have the House of Representatives, the Senate. I mean, seriously, I'm not into politics, so I cannot really give you my view here. But we all know that statistics has proven that once there's a change of party involved in the House, we usually will see an initial upside in the market, because it's just like, you know, some celebration. But then after that, there usually be some selling. Now, not every time it's like that, but majority of time. So I'm pretty confident this time around that Democrat will lose back. Okay, this is very clear, because Joe Biden and administration, they really screw up, and now the oil price is so much higher, inflation is going up, and of course, if inflation, the unemployment is going up at the same time, we're going to see a bit more trouble. All right, now before we go to the technical side, thank you once again. Last Saturday we did the TWB Spin the Wheel Lunch with Cal. All right, the two winners here, Mr. David Liu and we have Mr. Louis Yo. All right, two of you. Now we have left comments for you in the YouTube side. Let me just bring it to you right now. Let me just show it to you. Okay, here we go. Okay, so we did the live and we do the recording here. You can watch the replay over at the Trade with the Boys channel. And thank you guys again. We have broke above 700 subscribers. That's a big jump for us. Thank you very much. Now for Mr. Lewis, all right, I already left the phone number to contact us due today by 8 p.m. Okay, all right, and of course Mr. David Liu, all right, we have also left you a message, and then do contact us on the contact number by today 8 p.m. What we will do is that we will contact you, and we will be tripping down to this particular beautiful restaurant called the Venus, and apparently this restaurant is beautiful. The food is excellent. Okay, I heard that from a friend of mine who's been going there regularly. He said, Cal, you must go for this place, and it seems pretty good. Okay, so we will be going there, and of course guys, if you really want to be part of this, very simple, make sure that today I left the code on the top right corner somewhere on the presentation. Quickly now leave in the comment box the code, and then you will stand a chance. Okay, so every Monday, Wednesday, Friday I will be doing this, and we will do the lucky draw on Saturday. Okay, all right, now let's look at the chart for today, and this is something that I want to share with you today, and that is back here. So this is the one, the VIX. Okay, now VIX has tripped our stop loss at 25. Pretty sad, because we basically bought at about 30, then we put a stop loss 25, and the market tripped it on Friday. Didn't expect that, but come on, I mean, things happen in trading, so we just need to follow with the risk management. But I noticed that at 25, the market did not just go down, it stopped there. And if you look carefully, if you look at the RSI reading right now, since the 2020 until now, we have never seen the RSI anywhere lower than 30, okay? So which means that this is actually a very oversold position. So think about this, what would happen? Now, based on the last time we see this, where the market hit about 33, the market rebounded strongly all the way from 18 all the way to 36. And of course, that was here again. We have this point on the December where it was trading about 20, it shot up all the way to 38. Okay, so if let's say, if I want to say, I would like put this into the picture. Then with the midterm election coming on tomorrow, and what I'm seeing right now, I kind of believe that there should be a push up soon. Okay, and of course the US dollar came off on Friday, that pressured down the VIX. So if you look at it, right, the US dollar goes up, usually the VIX will actually follow. This is something that you need to take note. Okay, so let's just look at the dollar for today, and let me just take away this. Okay, let me take this away. Okay, hold on. Dollar on its own. Now you can see that we can see that the US dollar actually came off pretty strongly on Friday because of this employment data was so good that they think that the US economy is doing well, so there's no need to actually hike interest rates. But problem is that I don't buy that BS at all, because if the employment is still doing fine, that means Jerome Powell has not reached what he wants, and he actually has the power to continue to hike more interest rates. So this is something that I find very interesting. But again, as you know, the stock market and the market usually play this style of what they call movement. So now, as long as it stays above this channel, I strongly believe that the next 2-3 days the market will go back to 113 again, and of course that will actually bring the VIX higher and probably pressure the equity market a little bit more. Okay, all right, so watch out for this. This is something that I need to share with you. Now, how about the TWB system right now? Now, before we go to that, you can see that this is the 5% rule. So at 82.5% right now, the market is at 32,334. As this morning, we can see that the market gapped down because of the news from China, which is not really happening, about the unlocking of the country. So the market gapped down first, but incredibly, it stopped exactly at the trend line that I draw earlier, and now it's rebounding, as we can see here. Okay, so I'm going to tell you this, 32,334 will be the most important critical resistance level. If the market can stay above this figure, well, my bet is going to go back up again to 33,258, okay? But of course, if the market pull back and stay below 32,334, then the technical point here itself, which is at 32,136, will be the first support. But once it breaks the support, then the next downside will be all the way down to 31,411. Okay, so this one is traders what they call nightmare or fun time, depending where you are right now. But make sure that you just follow your rule; it should be fine. Now, China market this morning came down, missed the MLP, rebounded. It's still pretty strong right now, and still there's rumors saying that nope, there's some saying that there's a potential of the what they call relaxing of the law in China. Plus we can see now, once again, there's a lot of cities being closed down or locked down because of the COVID prevention. Okay, all right, let's look at the market for today. This is the Dow Jones. Okay, the Dow Jones today has a bit interesting. Well, let's take a look right here. The Dow Jones here itself, right, we have a CCRY positioning, but this morning it gaps down, it crosses a bit of CCYR. But you look at the KSI, you look at the KRW, both of them, this is green, means the boys are buying, red means there's some selling weightage, but at the moment now, seemingly the buying is coming in. So, and the pivot 2 at 32,226. Now, by right, if its market stays below this 32,226, it will sell call. But if you look at the TWB manual, we said that if the market can go above OP and above MLP at the same time, usually the market will go higher. And of course, now the market gap down and stick above P2. That means that most likely the market is going to go back up again. So I kind of believe that the Dow Jones will go and tap this figure here at 32,497 for today in the near term. Okay, so watch out for this, guys, and it's moving up as we're speaking right now. Now, this is the TWB system. If you find this amazing, contact us through Facebook. We'll come back to you. All right. Now, for the Nasdaq, well, interesting. As long as the dollar is really coming down, what you can see is that the Nasdaq will recover. And we can see today that the market now today is a very different trading. Wait, let me just take this away. Now, today the market opens slightly below pivot 1. So by right, above OP, above pivot 1 is a classic trade. It's time for buying, right? So 10761 is an MLP. So above OP, above MLP, above pivot 1 is a strong buy. So it is possible for the Nasdaq to test 10,899 level. It is very, very possible. Now, the indicator wise, KSI and KRW both are red, so that means that the upside will be limited. It won't be too far high. Okay, All right, S&P 500 right now. S&P 500, there's a mixed bag in the indicators, but as long as the market stays above OP, MLP, and MA30 in this case, it should be able to touch back 3770, which is the BNB SL, BNB minus 1x1 extension level. Okay, so it's coming back there. Anything higher, you go back to 38.20. All right, again, what's the reason of buying now? Apparently the dollar is still not strengthening strong enough, and the yield is sideways, and that causes it once again. All right, and last but not least is the one that I want to share with you is gold. Now gold on Friday, wow, rocketed all the way. I mean, I was expecting a, honestly, so I have got it wrong here, but the thing is this, now it's up all the way. This is silver, my bad. Let's bring the gold in. Here we go. Yeah, then gold all the way. I mean, I thought that it was going downwards, to 1604, but when it opens and cross above the BNB support level, I know something is very wrong. And when it breaks the BNB RL level, I know that's going to hit to the hill. So 1683 will be the level that I will be looking for a sell order, because I believe that the gold market is still not going to go up with the US interest rate environment still going strong. And of course, we want a lower interest. We want a lower we want the employment to be going down, so that is another reason. But of course, people argue that what if the US is not doing well, would gold be a good buy? Well, usually that will only happen if the dollar is really depreciating. So if the dollar is not depreciating, it's going to be very tough for the gold market to come back down. Okay, all right, so that will be end for today itself. So make sure that you guys prepare your trading day. The numbers I already told you earlier to take note, and I'll see you again guys on Tuesday. See you again. Bye bye.